All right, and welcome to another NQ review. All right. Did that sound like super dramatic or not really? I don't know. Mm. How are you guys today? Okay. Now, I wanted to make sure, ooh, we're talking about NQ today, obviously. All right. Talk about NQ almost every day. But what I want to do today was, again, all these videos always have a certain structure, right? Um, Along with algorithmic price delivery, right? The biggest thing that I want you to understand about the marketplace, right? And I'm gonna say this every video because it's relevant and funny. But the marketplace being fractal, okay, is got to be one of the coolest things that you can understand for yourself. And what I like about the marketplace is once you get comfortable with time and price, you literally find the same things in the same places. And this is what I like about pretty much any asset, you know. But the reason why we care mostly on this channel about NQ um, is I like how much NQ is going to move regardless of the market environment. Okay. So whether it's an accumulation day or we have a manipulation day, NQ is going to move. All right. Now, what I mean by that is we talked about AMD on how fractal it can be. AMD is perfectly timed by the quarter, each week, inside of a month. When you're looking at days inside of a week, when you're also looking at the 90-minute cycles, I mean, you can easily, I'm sure, go to another level with that concept by bringing either down or up again, right? But this is the biggest problem people have, okay? Understanding that the marketplace is fractal, that means you need to get used to how the market is timing itself. All right. Now, we're going to split through last week really quickly before we start talking about today, just so we can have some market context, right? Now, before we even get to like the Goldbach levels, and you can hear me kind of like congested or whatever. The changing of the seasons always gets me, so it's starting to get like that in between, like super hot, but going into fall where I'm from, and I'm like from the East Coast, so oh, there we go. All right, had to increase the brightness, right? But still smoking woods and trading all day, so there's no difference in whether I'm in New York or in Pennsylvania. Um, you can find me in both areas if you are around. So, um, when you're looking at the marketplace, obviously AMD is going to move by, like I said, days of the week. So like Monday, Tuesday, Wednesday, you'll have different parts of your cycle each day, right? But we talked on this channel so far about this being the first week of the month. So that automatically makes me think that this is an X, isn't it? Yeah. And why is that? It's too fucking trendy. It's just automatically too trendy. There we go. The wood is lit once again. And so what's really, really hard to do sometimes is that when you're like trying to break down AMD on like a week to week, month to month, quarter to quarter scenario, right? This is very trendy. So we already know that this is an X. But when you're looking at this price action here, this doesn't feel like an A. Visually, it doesn't really resemble how an A is like printed a lot. I mean, typically, just, you know, A's don't go pretty much anywhere. It's just super consolidated. It's not really taking out much liquidity or any at all. Um, and it's stuck in the same range. That's important right there when we're talking about function of accumulation. And this is the thing, right? I say it every time. It's either going to be an X or an A that goes first. It's the cycle's not going to go out of order. It's not going to give you two A's. It's not going to give you two X's. Okay. But what I'm saying is this right here is definitely an X, and we can verify that with the time. This right here is definitely another trendy type of move. But how you're not going to get confused is, do you see how and what we mean about this, right? If this is X, notice what our accumulation week did not do. And I said it could take out some liquidity. It's not that it did take out anything, right? We took out some, right? Those highs in there right here got taken. Okay. Oh yeah, we're definitely going to roll this next wood in about 10 minutes or less. These are some really nice woods. I'm smoking some Generation Now backwoods. I guess they're some newer limited edition ones that came out or whatever. And they're nice. I actually really like them. They kind of remind me of like a sweeter, sweet aromatic backwood. And me, I'm in the Reddit and everything. Like I love backwoods. So when you're looking at price action like this, you see how we have a high and a low of the week. Notice our accumulation week never took that high or that low. We got pretty close, but we could never do it. But realistically, and what did I say, right? And being a reliable narrator doesn't mean you're coming in with super heavy concepts every 5 seconds. It's simply you just breaking down the chart the way I'm doing right now and saying, you know what the fuck is price doing actually outside of profits? It's not breaking this week's low or the high here. Accumulation isn't very into taking major liquidity. Now, these are left open. The lows left open, these highs left open. There's hella liquidity above the Friday high. And also, London is wide open here so far. Now, before we get to like anything to our left, right? Let's get in here so far. All right. Now, you notice how I talked on this before. Be routined. I start a lot of times on the hour chart and I come downward. And even relating information to our Goldbach levels, you see how I start with like simple information. I'm not looking at Goldbach levels 24/7. No. You turn the levels on, you understand where you are, you gather information. Once you have some real experience with the Goldbach levels, I'm telling you now, you don't think you're ever going to turn it off. You're going to turn them on and off and on them off again. Why do I say it that way? A lot of people come into Goldbach levels and they think that it's a way to get away from market structure. And that's simply not true. You have to understand liquidity still. You still have to understand how each session functions. You still have to operate based on whatever model that you run. Goldbach levels are just making it easier for you to understand where PD arrays are forming, where you can expect price to react from, and oh, this is good. This is good. I mean, really good. And so this is why I wanted to pop in with a video tonight, because by the time you guys are going through the week with me, we have so much to talk about. Okay. Now, I need you to understand something. Now, when we first started talking on the channel, we started talking about how partitions complete. Now, if you were bullish last week, and me and the gang killed it last week, we had a fun time. We had a couple moments where, I mean, again, price action is rough. If you're not really into like how price is offering 1 to 3 times a day, both directions, this is really, really tough. If you're not somebody that's used to scalping intraday, or you're not used to like being comfortable, maybe you want like the day's range, this is terribly hard for you. Not saying you can't do that by waiting, but this is really terribly hard. Not saying you can't just operate and find sells here, but this is offering literally both sides of the marketplace a few times per day, starting in London. I'm a London trader and I get up and trade New York again in the morning. I don't normally trade PM session very much. Today we traded PM, that's fine. Every now and then I'll trade a PM session if I want to, but I operate on the same routine, same schedule. But realistically, when you're looking at price, and again, it completes our major target. Now, do you notice every time it keeps switching, right? We go above this low. These 19,683 is now a shared low. It goes back underneath. It's a shared high. This is a really, really important price for NASDAQ. So I need you to mark this. All right. You have highs above the Friday. This is major. All right. And the reason why we're talking on this right now is because when you see shared lows or shared highs, people ask me all the time, yo, are you trading towards shared highs? Are you trading away from shared highs or lows? How does that work? Oh, man. Notice how you have bigger PO3 numbers outside of this, right? 65, 61, and bigger numbers, okay? When you're watching how price is interacting in a fractal way with each dealing range, when you see all across the board shared lows or shared highs, you need to be paying attention to that exact price. Now, the reason why I mention you can't just understand Goldbach without market structure is because you need to come in and understand what price is doing now. All right. Are we going for these highs here? And there's a lot of liquidity up there, right? I mean, a lot. We have this imbalance. Now, what's funny is I was actually thinking back to a lecture with a few students a few weeks ago where we were trading in this area. and we were debating whether price had to go down to this low and support and come up, or whether it was going to come down and take this um, really slicked angled Asia low that was never taken from that Wednesday. Now we came down and aggressively took that the Tuesday after for sure, and that was fine. And that was a fun day, super fun day. And again, not understanding the assignment here, right? A lot of people missed out. A lot of people missed out. Or you keep cutting early, not thinking that price is going to really spool this far. Now, my thing is, when you're looking at a high or a low, again, we're looking for reactions. So notice how when price came down, and specifically, right? Now, this could change by the time you watch the video, but so far, notice how price is really having trouble closing back above that high. Like the bodies themselves are not looking to really close above that right now. And again, it could be to start to a Judas swing, right? It's 2 o'clock in the morning almost, but going into London in about an hour or whatever, like I want you guys to be understanding that price is creating new objectives, right? Whether it's engineering liquidity underneath you for it to trade back lower, and we're going to look for these because I like that level. Also, power 3 liquidity, again, I'm looking at a 729. I'm a little up there, only because I want to see where price is really headed, right? We filled in the 729 all the way, but we have shared highs. So now when we have the inability to get higher above this EXT level, the inability to get again from Friday and the Monday, right? This is also a lower low compared to the Friday, the London high. My bad. A higher low versus a lower high. That's what I meant to say. My bad, bro. Cut me some slack. I'd be stoned. My bad, bro. But the funny part is when you're looking at price like this and you're like, whoa, hold on. And what I'm doing is I'm not doing anything complex. This is nothing you've never seen before. But it's how I'm thinking about it is what I'm trying to give you in context. Break it down all the way. Don't get anxious about price action thinking, oh, it's going, I don't know what direction. There's evidence on both sides. Yes, it is. And that's totally fine. What you're going to do is start to do your planning. You have liquidity above here on the Friday and liquidity above here on London. We're going to verify by time if these are long-term highs that need to hold. Now, intermediate, anything intermediate is going to be a rebalance candle, or if you spool into a PD array somewhere, that's automatically what we call an intermediate term high or low. So for example, us spooling back into this high, low area, right? But again, Asia session, I'm not looking to be super micromanaging. It's not the session that I like to trade. Now I could go find a Judas swing, no problem. Love Judas swings. And these are actually, I'll say it like this. I organize price action based on current events as well. So if we know that we have heavy news in New York in the morning on whatever day during, normally first, second week of the month, right? It'll be of interest of me and like my London traders who are normally up with me. We'll trade Asia instead. We'll trade a Judas swing, be done by London, go to sleep because we know that London's not going to move because we have New York news. Which price is going to wait for it? It does it all the time. How often do you get excited for London and you say, yo, I can't wait to trade tonight? And then Asia goes ballistic and you get into London and it does fucking nothing. Like, for example, like right here, literally. And I talk on this, bro. For a certain reason, when we get back to Goldbach levels, give me a second. But This is my thing. When you like operate a certain way, you operate based on routine for long enough. And I've been trading for years, so that's why this is like involuntary to me. You don't really think about it. Oh, yeah, bro, nah, we can go to sleep, bro. We can go to sleep on that. I don't give a fuck about none of this price action at all. And again, you know that news was at 9 or not my bad, 8:30 or 10 o'clock in the morning. That's why this is 10 times cleaner here. Offers me a way cleaner move, but you're not going to get all three sessions moving simultaneously. You're not going to do that. Well, not often. I'll say it like this. If you're scalping, sure, you can find a move in any session. But what you're not going to do is you're not going to find um, this amount of ticks back to back to back to back when it's 120 here, or you know you're looking at X amount of ticks. But the problem is London goes and consolidates. It's going to give you an AMD profile like we talked about. Even if you didn't think about the AMD, if think about it on a basic level. Asia moves too fucking far. London's probably not going to be very fun, and you're going to want to wait for New York. Okay? If Asia wasn't very fun, which it hardly is, London does its job. Now look, same thing I just talked about 2 days in a row. Yeah? Asia makes this insane move. Yeah. And again, London makes a okay move. Not saying it doesn't move at all, but this doesn't happen 2 sessions in a row. Not the same amount of ticks, no. And then again, massive move in New York, obviously. But even when you like look at this, right? Look how consolidated this is for the amount of time that we're trending here, or not, rather. It's not saying it doesn't go anywhere, but again, look at the price action here. It's smoother. That's my point, right? Now, look at this. Going on the day today, all right? I want you to be really understanding of price, right? Now, yeah, dude, my bad. I'm like, my foot's still not 100%. Gotta be careful when I move it around. But, and to be honest, like, I have no idea. Like, I believe, like, my board, smacked the top of my foot, but I'm not entirely sure. Like, it just is not good. And it's like still slightly swollen. So I gotta be careful. All right. Now, the biggest thing here, right after midnight, let's go for a gem. All right. Now, I mean, easy gem. Doesn't have to be anything crazy, obviously. And so take off weekend, Saturday, Sunday. Now, watch. Now, I talk about this a lot. All right. Now, if you notice this, right, and we'll do it this way instead. This way is a lot more fun. Um, I'll give out like a basic version of this gem. Not gonna do it um, the way that I teach the rest of the Discord, but I'll give you a version of it. Now, the reason why I say it like that is regardless, it's not like any different in terms of the actual concept, so you're not missing out. But it's the organization of how easy I can make it for you. I'll have to do that for you right here. Now, you notice our midnight candle is what I'm highlighting, all right? So let's do this right here. That's midnight. All right. Now I'm on a 15-minute chart just so you can see how Not too big of a time frame, not too small to where we can't see liquidity, right? But at the same time, we can see exactly what price is referring to. Now, the funny part is, and you've learned this from ICT, when you come into like 3, 4 o'clock in the morning, all right, and you're trying to decide if London's bullish or bearish, you understand as a basic function, London can offer you high or low of the day. What else can it do? Referring to midnight, right? Now, if you notice that my yellow box clearly is above my midnight candle, and that's why I drew it out sideways like that instead of vertical. Wow, that's interesting. But again, I want to do it like this so you can see our reference points clearly, right? Damn. But what is that? Oh, got it, got it, got it. Okay. Now watch this. Now we're talking about midnight, right? Now we come down, we make sell side liquidity here, right? Asia, pop down. Now, this is just before London. My sessions are a little off. So right here is actually the start of your London. It's right here. Now, I've said this before, like the indicator that I use delays it, and I actually don't mind it. It kind of is a little dope for a certain reason. Just because you can see the stuff delineate like this. Now this is like 4 o'clock in the morning. Now I like this little like window right here. Obviously 3 to 4 is a first hour of London, so we're inside the kill zone anyway. But between 12, 3, and 4, and then 5 is the end of the kill zone, right? But realistically, when you're inside of this window, this really helps you organize price. And it's not always about Goldbach levels. But when you're looking at price like this, and then we can hit the replay mode, right? Watch. Now, I want you to reference the Goldbach levels with me here. But again, the whole point is, again, we do structure and function first. Midnight, you want to be either a buyer or seller above or below midnight when you're inside of a kill zone, whether it's London or New York. Why is that? Because you have to understand the function of a motherfucking candle and how it forms. So when you're seeing how, again, bullish or bearish, right? Bearish candle, it's going to give you a open, right? It's going to open, and this is midnight, right? So it's going to spool downwards a little bit inside the candle to give you liquidity, right? Once you trade back up and you take out that midnight candle inside of a kill zone, yeah, you need to be a seller. Like immediately, damn near. All this is forming a wick. And you can tell. You want to be a seller above midnight. Yeah, you might want to write that down. But the thing is, you already know this. You know this. And the only reason why I'm pointing it out, and when we reference the levels, ready, watch. Now, if we're on a smaller situation, I'll say, we're looking to be scalpers, days range, right? We're not looking for a super, super big power of 3 number to operate on, okay? So when I take my sessions off and we can see where we are, now you already know in terms of time where we are, okay? This is 3 to 4 o'clock. Now let's widen this up for the kill zone. So let's do like 3 to 5, and I'll change colors. So let's strike this red for kill zone. All right. Now watch. Now this is where we get comfortable. Man, these woods are really nice, bro. I'm like so hyped right now. Like I love backwoods, bro, and I just really love like good backwoods. I mean, um, anybody who like really smokes woods understands like how to find the best packs, how to find the freshest packs, like where to find like the limited edition very easily. Like I have plugs on that. Okay. But the funny part is when you're looking for not just good backwoods, but good setups in the marketplace, it's going to give you confluence that makes you feel a certain way. Now, people ask me like why I like touchscreens versus, not. Is like I came from trading on my iPad and like I used to always chart on the iPad a lot more than the computer. And even at the time I first started, bro, I didn't have a fucking computer. To see how far my trading has taken me so far is incredible, bro. Really just looking back at the time to where like I didn't even have a fucking computer and had to do all the stuff that I had to do to learn. Simply incredible. And I'm just thinking back to where like if I had a somebody tell me about Goldbach levels back when I started, oh my God. Yeah, it'd be quite scary. Now again, you have liquidity offered to you here, okay? We're also in an 81, and that 81 gave you again, there's that same shared high. That's that 19 683 was the low. 19764 was the high. Okay. So 19764. All right. Now that's right here inside of this little box, right? Now we already talked about this midnight candle, so I'm just gonna leave the arrow there. Okay. Now once we're above that there, now what's creepy about this and why we talk about this in my videos, the market organization, how to do what's called selecting and avoiding. All right. Now, selecting and avoiding is something I talk about mainly in my mentorships, my one-on-ones. And like I said, you guys get a lot of gems for free, but I talk a lot more in depth in my mentorship about all the concepts we talk on here. You notice how Asia's high wasn't taken. I don't have to talk on why it wasn't taken exactly there, but I will say in a basic level, you can see where your Goldbach levels are stopping it. You're at the high of your 81. The low of the 81 is shared. All right. So now I'm going to point out the low here. Now I told you about something in the beginning of this video. Price is fractal. And I'm going to say it 20 more times every video. Just so you don't forget. All right. Now, you want to be a seller above midnight because if you think about how any candle forms, and that's why London is infamous for being high of the day, is right when midnight opens. That's that window between that 2 and that 5 a.m. where it's going to, open, start to give you protraction inside that phase. And when you start to range expand, the rest of the day, as we start to play it out, the rest of the day starts to expand lower. Right? Now look at this. Ready? Now pause. Now, this is the 15. Let's go down to a 5. Let's pop it in. All right. What really happened here? Before we move to the next dealing range, I'm going to show you what happened. Right. Let's go here. And the reason why we're focused on the 81, we don't need the 27 right now. We're focused on price right here. Now, we know when this is happening, so we don't have to talk about that. Now, we understand where the cheat sheet is telling us where to trade. I get rid of that while I'm trading. Eliminate and give yourself more screen space. I do this for myself every single day. All right. Now I have a definitive starting point. This is why you see why I trade London and get back up and trade New York. Because it's easy. I'll be honest. It's easier. Why do I want to make my trading more complex? If I could use a simple concept over any of my big guns all day, every day, what? Now, there are times to bring in the big guns, and people think Goldbach levels is the big guns. Oh, no. I have some gems that are unrelated to Goldbach levels that have nothing to do with this logic. Does it work in confluence with it? Oh, perfectly. Is it dependent on Goldbach levels? No. That's why you join the Discord. I'm gonna sound like a broken record on purpose. Damn, these wood, bro. I'm like, whenever you see me like pause for a second and just like talk about absolutely nothing, I'm likely rolling another blunt, right? That's fine. I'll forever be like this, but I'm also giving you a chance to look on screen. How we actually went through this dealing range. Now, you tell me. Now, I'm going to give you more context. Don't worry. Right? So, again, starting at midnight. So, let's put our midnight line back in. Now, you know where it's at in terms of like us trading above the candle. Talked on that. You want to be a seller above midnight once we trade back above, turtle soup style. Okay? Now, when we're looking at the levels here, we understand the liquidity that I told you about was offered here. Now, it makes me hyper, I'll say this. And do what I'm doing now for yourself. The same way that I'm coming in and I can already expect what I'm looking for to be perfectly aligned. The real liquidity in the marketplace you need to be attacking is power of three liquidity, how we always talk about. It's the failure to reach these levels here. So even on the breaker level here, we don't have a reaction that goes all the way there, but we spawn all the way down into this dealing range far enough, right? Yes, we hit the high again and the EXT, I don't care. But this is showing you that yes, we need to make another trip down here. And when you get back down here, it smashes this. On impact, it smashes it. EQ causes consolidation, right? How I told you about. And how would we have participated in this dealing range? Where are my favorites? You guys know me by now. And I'm actually going to send a, yeah. So there we go. Do you see how the high here was referenced? EXT was first, okay? Then the high. Now watch this. Now, we talk about where to participate. If you understand about midnight, you could have sold that there. If you understand about the high, and remember, this is the high, the 81, and we have shared lows. Now, I told you earlier, you can actually trade towards shared prices or away from them. You have to understand the assignment. When you have a shared low, okay, and this is the real gem, I'll do it in a basic way. When you have a shared low, but you're trading at the top of an 81 or 243 or whatever dealing range that you're looking at, but you're at the high, but the lows are shared by 3 to 4 different dealing ranges. So like and I'll give you the context here. Let's look at which ones were shared. Now, 27, 81, 243, 729, all these were shared lows. And if you're trading up here, right? This is why this was so cool. Obviously, price came down, right? And I could select the bar, whatever, just so that doesn't confuse you. If we're trading right here, now I'm upshifted, I gotta go down. All right. Now, when we're trading in this area, right? Look, your shared lows are here. Now, the move's already made, but watch. I'll show you what I mean all the way. Let's say price is here. Yup. You can't give me that excuse. Oh, bro, well, I didn't know we had shared lows till we were at 19,695. No, that's wrong. You knew about these shared lows when price was trading at 769, at 763, at 754. You saw what price gave you as a shared low. You're trading near a shared high. 81 and the 27 share a high. That means this is in a premium. A deep one, in fact. So when price gave you a power through liquidity on the downside, came back up to a high above midnight, inside of a kill zone during London, which can give you a high of the day. And you're like, damn. A plus setup. A plus plus setup. You have to understand the context of the market. Understanding where your highs are, where your lows are not going to be your only confluence. And when you play these things out and you understand, you know what? Damn. You know what? I actually can't close my trade anywhere close to that till we get to a 19,683. You know damn well where the fuck this thing is going. Now watch. Look at that. Look at that. Look at that. Look at that. Right to liquidity. Doesn't even stop till it gets there. That's what I mean with liquidity when it reaches. It reaches. And what happens on impact? Like I said, you have a small retracement, right back down, right back down. And it's not going to stop. And London's quite manipulative. And again, when you retrace again, where do you get to? Nowhere you're unfamiliar of. Right to your EQ level. And all it was trying to do was, from a discount, seek a premium. It had to aggressively seek another premium to then make another move lower. And again, offers you what? More sell side liquidity. I say this all the time to my students. I don't even like when price goes aggressively one side without offering me more liquidity on the way. I don't like that. That means it's probably going to fucking stop and reverse. Now, obviously, you understand the context because time before price. Time goes first. It's not going to get to where you want it to go without it being the right time. I give you guys so many hints that I want to talk about some advanced stuff so badly on this channel, and I just cannot do it. I have to save it because, that's what's just me respecting my students, So now watch. Okay. But my point is, you knew exactly where the target was. It told you, and you knew exactly where to get in. You know that the high EXT level is the premium of the premium, that you need to sell from premium and not buy it. You know that liquidity is down here for attacking and not looking for buys from down here. Hell no. Now, on top of that, quick fair value gap. Oh, we were waiting to talk about that, right? I mean, perfect, right? And again, 5-minute chart. You don't have to go down to the 1 minute if you don't want to. You can pop up to a 5. Now, me, I'm gonna go to the 1 minute. I'm gonna pop down to the 1 minute. Now, see, that's a 5-minute gap.
shown to you as a 5-minute gap, right? Now, what's funny about this is thinking about something interesting. Like, oh yeah, yeah, yeah. Oh yeah, yeah, yeah. So you see how basically you just want to annotate 5 min fair value gap. These are time frame specific. That's why I tell you guys all the time to go down to 1, 2, 3, 4, 5 year time frames. Refine structure. That's a 1 minute imbalance. Does it work? Hell yes. And where is it attached to? The 3 candle setup that forms your fair value gap has a candle inside of your fair value level. Yes, it's still valid. Yes, I like it. Now, on top of that though, since we're in like the order block partition, I'm sure you can go into whatever time frame, whether it's 2, 3 minute, and find yourself an order block. Now it's totally up to you. Now again, this is your EXT level high. I'm comfortable taking the sell right from the high. All these wicks in there are giving me the energy that it's unwilling to get higher. And I can sell that, no problem. And again, if you're understanding a price, right, it's going to give you some, whether it's a breaker mitigation situation, right? And you see what happens with all this here. Why do you retrace again? Breaker and mitigation stuff. So you can actually take that step ladder. So look at this. Is that not what a mitigation block does? It goes up, down, but it's not really taking liquidity at all. And look where it lands. Ooh, now that's interesting. It goes right down. This is why people say they're afraid of the breakers and mitigation block areas and things like that. But it's only because you're not used to like using it algorithmically. You're used to finding breakers in like not the wild, not to say it like that, right? Like not to say like yo, you were in the jungle before and had to find like wild animals in terms of what we call PD arrays, but that's basically like kind of how it feels. Like if you're in the wild trying to find for value gaps, I'm not saying you can't do it because it's honest to God pretty easy. I can give you a method on how to use or find fair value gaps without um Goldbach levels, and it's based on where it is inside of the range and what price action is offered to you right before and right after. And so like again, people don't understand that fair value gaps do a lot. I mean, outside of that, it also offers you liquidity. People actually forget that it offers you liquidity, and when you go back up and to rebalance that gap, it's going to give you something to attack already. Ooh, that's so clean how I explain that. I'm not gonna lie. Smooth operator right there. Now, um, breakers and mitigation block. This is good. You want us to give you that little up down aggregation step ladder effect down to your target. That's good, really good. It shows that you're correct. And again, what are you going to find, right? I talk about this a lot because these are also my I mean, again, bro, when you get to a certain level, just the content itself is just no like different. Like, yeah, you could pick favorites on what you like. Some people like order blocks, some people like fair value more. Um, some people like breakers and mitigation more. Me, I do like fair value and liquidity voids more by nature. But if I really had to pick gun to my head, like any PD array, doesn't matter. I don't care. Can trade them all. Now, this is what's so important about this. Your breaker is found in the breaker level, man. Are you confused? Like, is that confusing? People say like, well, where can I find these PD arrays? Well, my guy, you could easily find them in the level they're supposed to be in. Mitigation stuff, notice where it happens, right? And I could circle it out. I can section it off even. And I'm glad that we actually spent a little bit of time in this area. And when I do these market reviews, bro, like I said, we're not here. This is not for the weak. This is for us to really break it down and say, you know what? What the fuck is happening? This is how you get good. I'm not skipping over something just because I want to fully explain it all the way. Just because you get bored. No, go ahead, watch another video. I'm so mean, yo. But I'm like this for a reason. Because when I'm teaching some content like this, why would we skip over things that are really important? Because you want the video to be a certain length. No, I don't care about that. I care about getting the information out in a way that makes me comfortable, that I like, you know? And that's actually going to be helpful for you guys, you know? And look at that, fair value. Is it going to work? Huh, I guess so. Interesting. But again, now, new partition, right? Popping in, okay? Now, we have the EXT level of the new partition, which is nothing but the order block level from the discount on the one above, right? Now, we have a fair value gap in the discount fair value area, but we are also bearish. We are not really bullish at all, right? And again, 8 o'clock in the morning. Now, watch this. Now, again, look at the highs here. Are you bullish or are you bearish from here? Are you done? How do we know? I mean, we do got some liquidity down here. And we really didn't finish the partition on this downside the last time we kind of ran down. So that would be kind of where, you know, area of point of interest, I'll say, would be for me. Let's turn these off. Super annoying. So let's see if we can at least get that draw of liquidity. If not, let's see what price wants to do. Okay, so far so good. Cool, cool. Now we're jumping down in this dealing range. Now I'm looking for liquidity void or order block. Now I'm not liking, there is a bearish order block here and we tapped into it. Now only thing is, right? Now it's going on time. We need to see, there's news here. There you go, look. There it goes there. Yup, perfect. It crushes that draw of liquidity. Perfect. Right to the low of that partition and stop it. Damn. Damn, that was clean. That's how you operate that. That's how you operate. But really think about this. Between the price section that we saw there, right? And let's bring it back. Okay, so we're going to bring this up to a 243. But really think about that. Really think about that. Let's exit. Look how clean that really was. And look where it landed. All right. Now, when I break it down, is it really that difficult? No, it's not. That's why I say in the marketplace, you want to be understanding of price action. It's not just your Goldbach levels that are leading you into success here. You have to understand liquidity. You have to understand where we are floating towards, okay? Now, the funny part is, look at the liquidity offered here. And look at the shared high and shared low now, right? Now, when you watch this video, we'll still be in this area. But what I want to do is, now you tell me, are we bullish? Are we coming up to attack these highs here? Or are we downside and we need to come down and take this liquidity here? I'm leaving you with these two areas to work with inside of this range. Let's do it together. So by the time we talk tomorrow, okay, let's see what we have as an answer. And so you as a viewer can use these shared highs or shared lows as they spring up. And long story short, my bad, I shifted it, didn't I? I did. Now, long story short, you want to be coming into whether it's London or New York, you want to be a buyer above these highs here, or you want to be a seller underneath the high. But again, use your context clues is what we need to do, right? So far it's about 2 o'clock in the morning, so we need to go and look at where's midnight. Now look, what do we say about midnight? So you might want to look towards sells. We also have that London high of the week so far, high of the day on Monday. Monitor price by 3, 4, 5 o'clock in the morning and see how close we get to this high here. If price has trouble breaking this high by 5, 6 o'clock in the morning, check again by 8 or 9. If it doesn't start looking like it wants to break these highs here, then yeah, I'd be looking for sells, okay? So just giving you a general outline of what I'm looking for on NASDAQ. And again, it's on the shareds, and we have a lot of them. So yes, there's a good move coming. I want you to understand that. And this is also a manipulation week. Have to get you guys comfortable with that. So manipulation week, it's gonna be a big move coming. So if you guys are looking for more help, I'll be with you on YouTube all week, obviously, like I normally am. Join the Discord. We are there every day, all day. Trade live with us. There's tutorial section, members videos. And it's not expensive. Send an email. All right. I'll see you guys in the next one.